name is Alex Taylor. I'm delighted to be your host for today. I'm a journalist on Euronews. I'm British, as Pierre said. I've been living in France for 32 years. Bienvenue donc chez vous, aux Français, aux Parisiens, tous les Français francophones qui sont dans la salle. If you want to know more about my career, you can look on the internet and type in Alex Taylor. Unfortunately, I share this name with America's most popular striptease artist, so you might have to go through a few interesting poses and postures before you find more out about me. But anyway, it's good to be here today. Just a few words. This is the third edition of mobile, social and big data. We're going to be hosting round tables all day. This is an interactive day. We will have a system going with iPads where you'll be able to ask questions, and these questions will come up on the screen, and I will interrupt our roundtables to throw any questions you have, so don't hesitate. When the system is starting in a few minutes, thanks to Loic, you will be able to ask these questions. Another exciting feature of the day is the bar camps. This is the first time these bar camps will be happening. The first one is after the break at 11:10. They are meetings of between 30 and 45 participants. They're brainstormings. You can go and everybody can join in little groups. And at the end, there will be general conclusions, the ideas, and there will even be a graphic artist who will summarize what has said. You have to enroll, il faut s'inscrire, for these bar camps. And the first one is starting at 11:05, and it's on the best ways to accelerate the mobile development in your organization. I suppose I'm encouraging people not to come and listen to these roundtables, but you can choose yourself if you want to go into the bar camps. That's the first feature of the day. Let's start our roundtable. All the roundtables, I've decided we're going to do them exactly on time. So Loic, gentlemen, is going to start off with the iPad. You have 40 minutes, and I want you to welcome, as you can see, on stage, Benoît Grossman, who's a managing partner of Idinvest, Christian Lebold, general partner of e.ventures, and Nenad Marovac, founder and managing partner, DN Capital. Big round of applause to get them in form first thing in the morning. Thank you, gentlemen, for being here. Investing in, backing and developing a global leader in digital media. I'm going to start with Christian Lebold. Why, can you tell us, you're choosing such an international setup at the early stage? You're present not only in Silicon Valley in Europe, but also in the emerging markets, in Brazil, Russia, Asia. Is it a good idea to start off big?
Yeah, what we're finding is that the world really has become flat for entrepreneurs. Barriers, really geographical barriers, play less and less of a role today when you look at distribution platforms like Facebook or Apple's App Store, giving you controlled access to a lot of geographies everywhere. And if you put that in perspective with user growth in emerging markets like Russia or Brazil, where just so many people are coming online and are very ready to play with all these platforms, it's a great time to really start companies that try and go international very, very quickly, because you need relatively little money or little capital to roll out into those markets very quickly and really build a big footprint. And that's why we're present there locally, because we still believe that if you want to work with entrepreneurs in the early stage, where you're going through a lot of iterations, really building the company, you still need that local presence to kind of help them get the feet on the ground. Yet it's really great to have that global perspective and be able to connect the dots between what's happening in developed markets and emerging markets. So that's why we chose that approach.
Okay, just to tell you that the Twitter hashtag EBG is working, so you can also participate in the debates through that. Nenad Marovac, that's about DN Capital. Did you share the same approach? Is it important to start off big or not?
Sure. Well, we focus mostly
against the chin. Otherwise, it's such a big room. Put it right against the chin.
Oh, really? Sorry about that.
Against the chin. There we are. We'd all hear you.
Okay. I've done that before. Basically, we are focused mostly on Europe. So Northern Europe, we focus on the UK, Germany, France, and Scandinavia, and also the US. So we're not investing in South America or Asia or not yet Russia yet, like these guys. However, all of our companies, so if you took a company like Shazam, which is, we're very early investors in Shazam. Shazam is operating throughout the world. As Christian said, the iTunes store, where you can buy the apps anywhere, has made a huge difference. So we have people using Shazam in markets in Africa and places like this we would never get to, but because of technology through the mobile application process, we've been able to get into markets we would never normally go to.
Okay, and what about Benoit? How did you start off, and are you as international?
Yeah, so like DN Capital, we're just focusing in Europe, not because we don't think there is not business to be done in emerging country. It's just because Europe there's enough work to do in Europe. And in Europe, we're focusing in France because we are based in Paris. You know, venture business is kind of a local business, so it's much easier to invest locally. When you invest in a company, you need to know the ecosystem, you need to know the entrepreneurs locally, so it's much better to invest locally. So this is why we invest approximately 60% in France, the remaining 40% in Europe. For us, Europe meaning UK, Germany, and Northern Europe, especially the Nordic countries. And among the investments that we did over the past 5 years, we were able to finance some big successful company like Criteo, online retargeting company, Dailymotion, video online company, or Deezer, the music company. And I guess for us, Europe is a very nice place to do business. There is a lot of good entrepreneurs. And
what, even in the current economic climate, because things are not great?
Of course, yes. You know, the ecosystem in the internet in Europe is quite good nowadays. Of course, it will be much better if the economic environment was not that bad, but still there is a lot of opportunities and first a lot of good entrepreneurs. Now, once again, you know, when you invest in a company, you don't invest in a company, you invest in a team of entrepreneurs, and I guess we are definitely a good entrepreneur in France and Europe.
Nenad, you wanted to say something about Europe.
Yeah, I was going to say, I've done a presentation recently on this. I think it's the most interesting time ever to do startups in Europe. You know, it's cheaper to start companies. The big companies are laying off people. There's no job security with those big companies anymore. Our average growth rate in our portfolio is over 100% per company, if you took it across the portfolio, and most of that's in Europe. So, you know, the digital sort of economy, which everyone here in this room is working at, is still growing at a tremendous velocity. So, and especially if you look at you know, digital music with Deezer and Spotify, these companies are still just absolutely taking off, and we're not even close to.
Can I ask an innocent outsider's journalist question? Where does the money come from? I mean, I spend my life interviewing people who tell us it's a crisis in the European Union at the moment. Where does the money come for the investment in the first place?
There's a lot of money sitting right here at the table here, and then there's a lot of VCs in Europe that have money, and actually you see a lot of people from Silicon Valley, Kleiner Perkins, Sequoia, coming to Europe. So. Kleiner's invested in Shazam, Kleiner's come in and invested in SoundCloud, Sequoia's come in and invested in Songkick. For good companies, the money comes from everywhere. I mean, Russia, you see access.
Yeah, I would really add to that. It's a great time, and we're seeing very robust growth, for example, in e-commerce and other verticals like that. And I spend a lot of time in Berlin. I'm usually there about 2 days a week, and the ecosystem there is growing extremely because it's still a comparatively cheap city to live in. And so when you start a company early on, that's obviously an important point. And on the other hand, it's still, you know, an attractive place where people international like to come to and spend a few years when they're young and starting their careers. It's a great hub for startups, and there is more happening there than you would have thought. And the other thing that is exactly right is when big companies are laying off, that's actually a great time. I would say that, you know, one of the reasons the scene in Berlin has developed the way it is because eBay laid off a lot of people a couple years ago when they removed their European headquarters from there. And a lot of eBay people are now can now be found across the Berlin startup scene. So things are actually doing very well across Europe from what I can say.
Totally agree. I've just spent 7 years living in Berlin, so I know exactly what you mean. Friedrichshain is full of young people setting up all kinds of things. Let's go back to the questions we were going to ask you about the suitable domains and industries in which new companies can penetrate and assert themselves. Which would you say that the new domains would be?
So I mean, we focus on software, digital media, e-commerce, and mobile, and all four of those segments are extremely interesting. Software as a service, a big trend in the software space. E-commerce, we love Germany. Germany's fifth largest economy in the world. They're just figuring out e-commerce. They have the best.
It's a very difficult market to get into, though. It's everybody likes Germans because they have a lot of money, but it's
not everybody. Not everybody. I can tell you, not everybody.
No, but it's a very difficult market, isn't it, to penetrate the Germans?
Well, actually, I would disagree with that. If you look at the German market in terms of how big it is as an economy, you only have 4 or 5 VCs working in the German market actively, which we can see. If you go to Silicon Valley, you will find 4 or 5 VCs just in one building on Sand Hill Road. So we think the market opportunity in Germany is extremely interesting. So,
yeah, I think from a funding perspective, I would agree 100%. Because in the early stage, you know, Benoit, you said it's a local business, so you need investors who are close. And in Silicon Valley, people always say you have to be within an hour's drive. And I think in Europe, it's an hour's flight. And so London and all these places are still relatively close. It's true that it's a very competitive market, at least in e-commerce. But at the same time, when there is innovation, it's a great place because it is a relatively large economy. And then it's still a lot less competitive than typically in the US. And you can build a relatively large company and then go across Europe from there.
Benoit?
So for Idinvest, regarding the space we're investing right now, we're still investing in, of course, the software, the pure media side, also e-commerce. Even if the pure e-commerce side, we're very cautious because finally, not many e-commerce makes money. When they make money, they make a very, very small margin. So we're just focusing on e-commerce where you get a strong margin, which is nice, of course. But you know, where e-commerce, where you don't have to pay the customer each time the customer goes to your website. So very low acquisition cost, and also a website where the customer can go like a few times a year without paying each time the customer to go back to your website. Which is very difficult to find, so this is why we just made very few investments in the pure e-commerce.
Okay, well, let's we talked about Europe. Let's also talk about the emerging markets. What are the required market conditions so that you can start up in a particular market?
So when we look at emerging markets and sort of where we, you know, start going into, we look for internet adoption rates, obviously sort of typical metrics as broadband penetration and, you know, e-commerce affinity and logistics infrastructure and things like that enable you to build businesses that have a local footprint. And you need to have sort of a growing middle class. And that's, you know, the case in Brazil. That's the case in Russia. And that's kind of what we look for. And really, if you look at the trends in terms of, you know, how much time people are spending online, it's impressive. I mean, Russia, by visitors, is the largest internet market in Europe, right? Just in terms of traffic that's being generated. And then Turkey isn't very far behind.
Would you like to say, what about other emerging markets? Where have you been investing outside Europe?
Would you consider Eastern Europe emerging market?
Tell me.
Yeah, well, when I was at Advent, we did a lot of work there. One of the issues you have in emerging markets is talent. So why does Silicon Valley work so well? Because in one afternoon, you can put a team together of Sheryl Sandberg and, you know, Reid Hoffman, et cetera, which you don't have in Europe yet. It's starting to grow in Western Europe, but in emerging markets, that's even harder. So for us, the number one component is talent and then capital. And then obviously some of the logistics. I mean, I know the e-commerce things in Russia are pretty tricky where actually people are delivering and getting cash paid at the door when they drop off things. Well, that invites all kinds of weird stuff, which I'm not sure we have the stomach yet for. So we'd probably want to keep things rather digital in emerging markets as opposed to physical.
So once again, we don't invest directly like in emerging markets, not because we don't think emerging markets is not a good place to invest. It's because we just, once again, local business. But what we do sometimes, we invest in company, in Europe-based company, and this company opens some subsidiary in the emerging market. For example, Viadeo, which is a very successful company, opened a subsidiary in China 5 years ago. Now they're the number one professional social network in China. So I much prefer to invest in European-based company who find for me the best talent locally, instead of finding myself the best talent in China, which I will be totally unable to do that.
Right, okay, let's go on to another of these questions. In order to create a profitable digital service, would you say that marketing and advertising are really the only way that you can get into these markets? Or are there other ways? What's been your experience?
So we were like the freemium model. So freemium model, so you've seen it with games, with virtual goods. With Shazam, we started out where you could actually tag for free, first 5 tags, but then basically if you want to tag more, you buy the premium product. We got rid of the 5 tag limit. Now we have, if you don't want the ads, you can have the premium product. That works quite well. And then, of course, the affiliate, the lead generation. So if you can have a sticky site or product that people come back a lot, but then have things that can bring you where you can actually get paid from lead gen.
Yeah, I think, there's more and more business models today that work really well. I mean, I think mobile is very interesting, as there is a lot of very viral applications. If you look at a company called Supercell, for example, that's out of the Nordics and is a big mobile gaming company, they've had sort of a skyrocketing development this year with very little money paid in marketing, right? And so you can do very interesting things if you build applications that really engage users, because today the friction in getting something out to a lot of users is a lot less than it used to be a couple of years ago. If you look at the time that it takes successful applications to reach the first million in users, that has contracted immensely over the last couple of years. If you look at things like AOL, ICQ, it took them, months and weeks to get there. Today, if you're really good and you leverage Facebook Open Graph or mobile infrastructure, things like that, you can get there within days or even hours, and that is incredibly powerful for companies.
So traditional marketing is on the way out. It's not going to survive for very long with this, no?
But also remember, the CPMs on mobile are terrible, right? So I mean, and you got to have so much volume to make it even move the needle. So it's really not that interesting. And we have a lot of mobile businesses, and that part of the business is not that interesting.
I don't think traditional marketing is on the way out, though. I think the only thing you need to understand is sort of what products suit themselves for viral distributions, and which ones are good for traditional marketing.
And which ones would those be?
Well, I think if you look at, for example, in France, there is a company called Vestiaire Collective, right? So this is more of an e-commerce business in the high fashion area, or we're investing in a company called Farfetch. Same thing as an e-commerce marketplace for high fashion. There you have high margins, and you can afford on a per user basis to spend a good amount of marketing. And so there you just need to be sort of the king in performance marketing. That's what you need to master. And then there are other plays where you have huge user bases but relatively little revenue per user, and those are usually freemium. So take a Shazam. There it's a good case where you need to think of a way to make your product viral and make users talk about it, and then you're fine monetizing a tiny sliver of the user base, just because it's grown so large. So it really depends on the business model.
But what worries me a little bit in what you're saying from the outside is that you say about things going viral. As far as I can see, what goes viral are the totally unpredictable things. It's very hard to want something to go viral. It goes viral because it's so unexpected. Everybody looks at it and says, "Wow, that's really." So is that not?
That's the reason why only, let's say, 1 in 1,000 companies that get started really make it, or products, right? And that's what we get paid for. And what makes our job awfully hard is that typically when you invest before what we call the inflection point, right? Before the thing starts to kick off, then it's very hard to say, are you going to have a success or not? So we look at metrics, and so for example, if something is growing at about 1% per day, that's a good basis growth on a viral product. But it's very hard. And then once you have hit the inflection point, the problem is it becomes very expensive to invest, and those companies kind of generate a lot of cash flow.
So of course, on the advertisement space, we like this space, especially the retargeting, which is a part of the advertisement space. Criteo is now the #1 company in the world for retargeting. Just to give you some number, Criteo business is to buy some CPM and to sell to the customer some CPC, some clicks. Just to give you some figure, Criteo is buying approximately 15 billion CPM per month. like on the worldwide basis. You know, they are present like in all the continents. And by using the retargeting engine of Criteo, Criteo is able to multiply the click-through rate by a factor of 10. You know, like a traditional website, you get a CPM click rate of approximately, 0.07%. And by using Criteo retargeting engine, you can increase this click ratio by a factor of 10, which is a huge value, of course, for the customer, but also for Criteo. This is how Criteo is able to make some good margin by selling click and buying some CPM, which is a good business.
Let's go on to the question here, which is one of the topics of this round table. You seem to be suggesting anyway, mobile is taking over the traditional web. Absolutely, there's going to be no traditional web used in about 10 years at all, is there? I mean, mobile is just taking over.
I think it's a combination. I think the best solutions are web, mobile, tablet. So it's not just on one, but actually it's a seamless integration using HTML5, where basically you can have it everywhere you go. So we all have Facebook. You look at Facebook on your computer, you look at Facebook on your tablet, you get Facebook on your phone. And I think the applications that embrace that are the ones that are really actually making the most interesting strides.
Do you agree with that? Isn't it difficult to predict all this? Because who would have thought 10 years ago we'd all be sitting here with these tablets?
Yeah, I mean, you know, the thing is, we get asked a lot of times, you know, what is the next big thing? And frankly, if I knew it, I'd be doing it myself, right? We don't know. Our job is to kind of know it when we see it. And so we just try and track these things, you know, as closely as we can. And I would agree. I think, you know, a lot of very successful companies today are those that manage to kind of marry the different worlds together in a way that really creates additional value for the user. And this is kind of what we see for the next couple of years to really intensify. I just think relatively mobile is going to take a much bigger chunk of the value because you have a lot of things, you know, whether it's just GPS or larger screens and all these things that just make the devices so much more powerful. And that's why you have a value shift to mobile. And tablet is entirely new category. And you see, especially some game studios going tablet first, which is really interesting, and frankly, it's just something we had to react to because it was hard to anticipate. You can't read, well, I was going to say you can't read Steve Jobs' mind, but I guess that's not really applicable anymore, but it's still just very difficult, yeah.
Is it also, can I make a point, just a general point about this? Isn't it also a generational thing? I've got to the age now where I have to wear glasses to use my mobile phone, but I don't use glasses to use my computer. So using a mobile phone, I have to take my glasses along, and it's a hassle, so I don't do it. Whereas I sit on my computer, I order everything on my computer. I'm a totally a PC person. Isn't it also, there's a whole market of people who are going to get slightly older, and the mobile devices, I know everybody in the room is young, but there's a huge, huge market with people, lots and lots of money, who are not really catered for in these in mobile devices.
Trust me, you'll be targeted by so many e-commerce shops that you can't even count it. I mean, it's not like anyone is going to be left behind. There is going to be an abundance, or there is today already an abundance of offers for all the different target groups. So I don't think the fact that some people may be less prone to use mobile means that they will not have access to certain products or services.
Right, let's go on to the next one. What are the investor exit strategies for mobile and social apps? Who are the potential buyers, and for what value? What would you reply to that?
I would say they're the same buyers that are going to buy your web or digital media companies. I mean, everybody's getting mobile. Apple's in mobile, Microsoft is mobile, they just launched Windows 8, et cetera. So as I come back to my last point, I think it's about an integrated platform using mobile and web and everything. And I think really digital media is just trying to, using mobile as an extension as a channel. I don't think it, if you look at it, how many mobile exits have there been? Apart from infrastructure, there hasn't been that many, right? So I still think it's still out there. I think it really is an extension of your existing business, and obviously it's also a way to bring people from mobile onto web as well. So I don't think it's just one or the other.
Christian? Pardon.
Yeah.
Yeah, so I agree with Nenad. So on the mobile, everybody has been talking for the mobile for the past 10 years, but no major exits, no major hits company. We still hope to make some money in this area. And regarding the exit strategy as an investor, you when you want to exit a company, it's either like an IPO or a trade sale. You take whatever comes first. We are totally agnostic. What we want to make is to make some money, to make a nice return. So, and I agree that the company will buy this company as the same as for the web company. So it's not a specific, no specification for this one.
Yeah, I think maybe just two comments. I mean, the first one, from our perspective, IPOs are really tough, right? We were in 2 IPOs last year, and I can tell you, it's a lot more painful than selling a company to a strategic acquirer. Just because in today's market there is so much volatility, and they are so much driven by sentiment of the entire sector that it becomes very hard to differentiate how a company is really performing and how the entire sector is performing. So you can get dragged down or moved up by the tide of Facebook or some other lighthouse companies, relatively independent of the individual company's performance. And it's just, there is a lot of questions around whether it makes sense for those companies to go IPO. The other thing is that today, as I said, you grow much faster as an internet company than you did 10 years ago. So there's really cycle compression. That means when you are at a scale where you can go public, you really only have relatively few years of operating history. And Wall Street doesn't like that. So, all the frequent changes that you need in strategy and the lack of visibility on revenue and profitability is a big challenge in IPOs. And so we find that, increasingly difficult and prefer the other route because, this is my second point, I think exit markets also have become increasingly global. You look at buyers like Naspers from South Africa, or think about Rakuten that bought Price Minister, for example, here in France. Those are companies, that acquire businesses for several hundred millions of dollars, even billions of dollars, or euros for that matter, and they were not on the radar 5 years ago. So I think there's tremendous opportunity in giving access to those international acquirers to Europe or other markets. So that's really internationalizing as well.
When you say Wall Street doesn't like that, isn't Wall Street going to have to get used to all that? I mean, Wall Street is going to have to change, isn't it, to adapt to new models?
Yeah, I guess so. But I think, it's really just public markets are in a continuous challenge between sort of looking at companies that are stable and provide dividends and all of that, and then looking at high growth businesses on the other hand. And it's really very obviously difficult to find both. And I guess it's going to become more normal to have these type of young internet companies public, but it's still going to take some time, I think, for people to really adapt to it.
Yeah, I also think we're going to live with the aftermath of Facebook and Zynga and Groupon for now another 24 months, because some people got a little bit too greedy. The bankers were really stupid with those deals, and they screwed it up for everybody. Because it's going to take, a lot of the investors now, they're not going to want to look at a tech IPO because they just lost 85% of their money on Zynga. They lost 50% of their money on Facebook. So that is all going to go back into the system and push out, a lot of companies' exits for a long time.
Yeah, the window is closed right now.
Yeah.
The aftermath is huge, isn't it? You
Absolutely.
say, well, how long is it going to last, the
Absolutely.
aftermath of Facebook?
Well, investors have short memories, but they're not that short. So we're probably in for another 5-7 year cycle.
Yeah, but what happened with the IPO Facebook was bad for the stock market, was bad also for the fundraising. Right now we are fundraising at Idinvest to raise a new venture fund. And when you have meeting with investor, what people are looking at Facebook is not that there was like a $50 billion value creation, but that they lost $50 billion since the IPO. The investor have a top-down approach. The company was worth $100 billion like 6 months ago, and it's worth 50. So the company lost 50 billion. And as a venture fund, you saw that this company was created, 8 years ago? It was 0 8 years ago, now it's 50 billion, so we created 50 billion. So it's very hard to explain to an investor that Facebook has created 50 billion because no, they lost 50 billion. So it's bad for everybody.
Missed opportunity.
Right, okay. Let's, in the last 10 minutes of the roundtable, look a bit into the future with this question. What are the sectors in which investors aim to focus your investments in the coming years, and what will be the next big digital success story in mobile business and digital media?
If I knew that, I'd be very happy. So
Gaze into your crystal balls. You must know. I mean, you're in the sector. You must know what's coming up.
So the one area which I think is very interesting is obviously TV. So if you look at Spotify, I can listen to any track I want, anywhere, anyhow, and I just pay my $9.99 per month. TV, I got to actually be in front of my TV when the football game's playing. I can't just come home and watch. Okay, if I taped it, yes, but what I want to be able to do is actually be able to access any program, anytime, anywhere. And so I think, imagine the world's largest DVR where you can watch anything, anywhere, like Spotify. Now, I don't know who's going to pull that off, but whoever does, that's going to be a $100 billion company.
Are you sure we want to do this, though? Are you sure we actually want to watch a football match anytime, anywhere? I want to watch a football match when it's happening. It's not exciting if it's 10 seconds.
Yeah, but if I don't know the result and I can see Chelsea play it without, Chelsea, Paris Saint-Germain, I want to see that. But I don't want to see it. I don't want to know the score before I see it.
I mean, I think we talked about mobile already quite a bit. And there's just really many interesting sectors. One thing that I find particularly interesting is an area called collaborative consumption, where really it's about sharing resources because the internet allows you to do so very effectively with very little friction. And you look at businesses like Airbnb or 9 Flats that allow you to share apartments and really open up sort of a new way of travel accommodation. The same happens for cars, for office space, for almost everything you can think of. And what I find interesting in that space, and that's sort of a meta trend that we see across different verticals, is that trust is something that you can kind of package online today. So the power of reviews, whether it's reviewing sellers on eBay, which was kind of the initial thing, or whether it's reviewing apartment owners in some of those travel businesses or car owners, wherever, is really strong because suddenly you rent out your apartment to somebody you've never seen before, right? And that requires a lot of trust. And this trust is something that I find, particularly interesting that it can be packaged. We're investors in a company called Auctionata, which is a marketplace for arts and antiques and collectibles, where people buy stuff for, tens of thousands of euros. That's because, there's experts putting their kind of seal of approval on the product, and this conveys the trust necessary to make such a big purchase online. So whether it's reviews or expert endorsements or things like that, trust is something that can be built into products today and allows for sort of very different categories to emerge. And I find that sort of a very interesting trend and spend a lot of time on that.
There's more and more of a reaction against those sites where you, like TripAdvisor, where you kind of like it's the majority opinion, but there's quite a strong reaction against that, isn't it?
People that's a slightly different thing, though, because that's sort of, consumers reviewing businesses, and that kind of lends itself to abuse because you obviously then have businesses trying to skew those reviews in their favor. I find it a different thing if you try to make individuals transact with other individuals through such platforms. So, if I go to London and want to stay at Nina's place, and I see, okay, he's rented it out, 10 times, he's always been a good host, and he says Christian hasn't, ruined anybody's apartment the last 10 times he stayed in other people's places across the world, he's likely to accept my booking request. And that's what I find interesting, because this is something you would have thought to be completely impossible 10 years ago, to let a complete stranger stay in your place.
Benoit?
Everything has been said by my two colleagues, so...
Right, well, one final question, which we didn't talk about, coming back to Europe. Why are there so few European-born leaders that achieved global leadership? What is the problem with us?
Well, just because it's much easier to do business in the US for a lot of reasons, because Silicon Valley has been around for the past 50 years. US is just one country, one language, and in Europe, when you start a business, when you want to expand your business like in other country in Europe, it's like starting a new company from scratch. So of course it will be much difficult. That's the main reason.
I kind of disagree with it. If you look in the last 10 years, there's been a lot of billion-dollar companies coming out of Europe. Skype out of Sweden, Klarna out of Sweden, MySQL out of Sweden. Out of France, you have Deezer, you have Dailymotion. In the UK, you have a company called Autonomy, which sold for $10 billion to HP last year. So I think the US is just very good at marketing. And Europeans don't beat their chest enough and talk about the successes. And I'm the chairman of the European Digital Task Force for the European Venture Capital Association. We're actually publishing a report next week, which we'll distribute at Le Web, talking about some of the successful European companies. Because, you know, also the European venture capital market, I mean, it's been sort of decimated. I mean, Benoit, we talked about fundraising. It's been difficult. But actually, the returns of the guys that are still in the market in Europe are actually very good. And I think if we were all to get together and put our index together, we'd actually find some returns that would probably be comparable, if not better, than most of the top quartile US. Obviously, taking the Facebook fund out and some of those, which are anomalies. But I know some funds in the UK that are delivering 4 to 5 times their money on the fund. And I know lots of funds that are at 2, 3x. And you know, if you read the Kaufman report, they invested in 100 funds in the US and they got 1 times or 0.9 times their money back. So I just think there's a marketing issue. We need to actually tell the story in Europe more.
Where are you from?
I'm mixed, as you can tell by my name. I'm half European, born in Croatia. My mom's English and Italian. I grew up in the States and here, so I can play both hats.
Perfect. I hope you don't say the same thing in the States, but for the other side.
Yeah, I fully agree with you with one big difference. You know, when you get a success in European company, we have quite a lot of successful European company, but you get like valuation between 1 to 2 billion euro. And the US, you get like a valuation just 10 times bigger. Of course, I know because the main difference is being marketing, I fully agree with you, but regarding the multiples you can do, of course, you're paying the company at a much higher price.
Exactly. That's the point. The pre-money here in Europe is usually 20% of what it is in the US. So if we're making a return, if we get out $1 billion and they go in, and we get in at 10 million, and they get in at 100 million and get out 10 billion, it's still the same thing.
Christian, a conclusion?
Yeah, no, I really tend to agree, and I think, you know, you mentioned a number of great companies, and the list can be continued. The problem is that, you know, when I started in venture capital, I think it was in 2002, a lot of my friends asked me like, oh, I thought venture capital didn't exist anymore, right? Because there was just, in Europe, in the 90s, there was an explosion in the second half of the 90s, and a lot of people got burned because it kind of was the worst time to get into it, right? Leading to the upcycle and the complete crash. And so we don't have a lot of VC, and if you look at the numbers of exits or successful companies compared to the amount of capital that's going in, it's actually really good. The problem is just there is not enough capital because also a lot of fund investors got burned during the late 90s where, you know, admittedly a lot of funds then had poor performance because they just got hammered on the downturn and the nuclear winter afterwards. So I think we're in for a great, you know, new cycle. We did some great investment in 2008, you know, year of the crisis. We did some really good deals. So it's not necessarily a bad thing for those people who are around at the table with funds that have money to invest. But I think we'll all benefit from, you know, more funds, larger investments, and so on, just because it makes the pie bigger that we all are trying to get a piece of.
Okay, well, thank you for sharing your experience. Pierre, we've got 4 more minutes. Do you want to ask any questions, make any comments?
No, not me, but does anyone in the audience want to take the floor to say something, to ask question, to tell a remark? No, we go to the next one?
Are we all Europeans here? What is the mix? Are we mostly French?
70% are French, yes.
Oh, right, okay. Donc, plutôt français, mais il y a des Européens.
Yes, 30% are European.
Perfect, okay. Well, there's 3 minutes. Just one question quickly to all of you. What is the biggest mistake you made, and what is the thing you are most proud of? Interesting. You're sharing your experience. The biggest mistake?
Biggest mistake is to have invest in a company when the management team was not at the right level. And my biggest pride was to invest in the best entrepreneur.
Good answer. Yes. What?
Well, I think in Fund 1 we did a few later stage venture capital deals, which was not in our strategy. So now we do really super early seed, early stage things. Greatest success, so I invested in Shazam at a $500,000 pre-money valuation. The last round was 300, so that's looking pretty good. Also, we sold Endeca last quarter for $1.1 billion to Oracle, so our investors are very happy with that.
Christian.
Yeah, I'm just debating whether I can use names, but you know, we maintain something inside the firm that we call the inverse portfolio for every one of us with the dumbest mistakes. So companies we passed on because we thought it was too expensive, and so, you know, in my personal inverse portfolio, there's, for example, one company that's recently gone public at, you know, $1 billion plus, where we could have invested very, very early on, and I thought that, you know, the 13 million pre-money was too expensive, and another fund did the deal at 16. So, you know, I have a few of those that are just incredibly dumb, but I guess that's, you know, that's part of the game. And you know, speaking at Europe specifically, maybe one name, SoundCloud is a really cool company out of Berlin. I could have, you know, invested really, really early on when everybody was very critical, and the valuation was in the single millions, you know, low single millions. You know, you win some, you lose some. And I think, you know, in terms of what we're most proud of, you know, same thing. I think we were lucky enough to get into some great companies very, very early on. And those are certainly the ones we're most proud of, yeah.